Folks, welcome back to the Taylor Tax Show, the podcast that helps highly paid, highly taxed, high profile, ultra high net worth, and high net worth taxpayers save a bunch on taxes legally and perennially. I'm Terrence Taylor. I'm an enrolled agent. I'm the co founder of Taylor Tax. This is Big Al Darnell Jr. So, what's up, Big Al?
What's going on, everybody? I'm Big Al. I love my mama. I'm also an enrolled agent
And also co founder of Taylor Tax.
and also co-founder of Taylor Tax.
And today, one of our favorite subjects is here, and that is how do we turn our children, our babies, our bambinos, our beloved children who will carry on our legacy and our genes when we're gone into millionaires.
All day.
So think of it this way, episode 36, using life insurance to make your children millionaires. And Big Al, let's just jump into the subject because this is one that we both are very passionate about.
Agreed.
Why do we like life insurance to make our babies millionaires? So I can go first.
Please do.
And no, you go first because I can see the energies there. Go.
Well, I'll tell you this. There's this quote. It says, "Shirt sleeves are shirt sleeves in 3 generations." And when we're talking about making our children millionaires, we're talking about generations.
Mm-hmm.
And what we're trying to do is trying to make sure that the transfer of this wealth happens in the best way possible, that we equalize the paying field when it concerns the transfer of wealth, taxes, and our children and the generations. That's why I'm so excited about it, and making sure that we set the stage to share with everyone, non-equivocally, one of the best ways of transferring wealth to your children, which is insurance. How about you?
So first of all, I saw how you did that, how you slid in the paying field comment.
Yeah,
I appreciate that. Folks, for those who have been with us, that's one of our favorite lines. We're leveling the paying field with Taylor Tax when it comes to tax payments. But okay, coming back to the subject at hand. The reason I love this, Big Al, is it's one of those things that once you hear about it, if you really, really care about people, you just want to share it. And when you're in a position to take advantage of it, you will see the benefits for sure. So why are we so passionate about this? We often talk about tax savings, but the reason why we're so passionate about tax savings is we want people to enjoy their money and for their money to help them to take care of the people and things that they care most about. And Big Al, without a doubt, we most of the time adore our children. Because we're human, we can't say we adore them all of the time. Most of the time we adore our children. So something that allows us to put money into an insurance policy on their behalf with the children as the insured. And over time, the power of compounding and compound growth allows them to become US dollar millionaires. Figure out this is amazing. And we'll talk about the specific mechanics, but this is why we're talking about this topic, folks. Anything else you want to say, Big Al?
Yeah. In Italy, they say from the stable to the stars and back again. So it's what we got to do is just make sure that maybe I'm getting beyond myself, but I'll go ahead and speak.
Go ahead and speak. This is your platform, Big Al.
Thanks, man. Right back at you. Is that I don't want any of us to get it twisted or to become colluded in our thoughts and our consciousness. It's not just about passing on the money. It's about passing on the mindset. All right. And I've read some things because I love behavioral finance, because the psychology of money and the psychology of people actually tell you a lot more about how to pass on wealth than the specific buckets you put them in. All right. Now, we're here to let you know about the buckets you put them in, but we're also here to let you know that that is not the only component of wealth, of a wealth transfer. The wealth transfer has to be a transfer of not just the money, but the mindset, and also the health and healthy relationships, because all that relates to wealth rather than just riches. So make sure that you also add into this concoction of what we're telling you, building confidence and trust in your kids, because that, like, a confident child and a child that trusts their parents and so forth, they're usually a lot better with handling money, large amounts of money, than somebody that was coddled the entire time without the trust, without building confidence in them, so on and so forth, because it's easy for other people to jump in their ear and convince them to spend it on something else. So yeah, that's what I wanted to say.
I love that, Big Al. And folks, you may have picked up already. We're not even telling you what to do or when to do it. We're starting out with why you should do it, right? All right. So, Big Al, without further ado, let's get into the what to do. Here is this wonderful thing called the $1 million baby strategy with life insurance. You normally want to use a life insurance policy that has cash value. You've heard us talk about this a bunch now. And that could either be a whole life policy or an index universal life policy. Big Al and I are particularly partial to index universal life policies because we think it's the better of the two. So here's what you do. You talk to an insurance specialist, broker, who can structure the policy for you correctly. You insure your child. As soon as the child is born, you can insure them. So if you already have children, like in the case of Big Al and I, our kids are, your daughters are 8 and 6 now, or 8 and 5.
Yeah.
8 and 5, and then my kids are 16 and 14. It's still okay. You can still make them millionaires. But as soon as you are aware of this and as soon as you want to do this, you set up your child with a life insurance policy. Big Al, when we did this, we were told that the parents themselves have to be insured to the tune of $1 million in order for the children to get what's known as a juvenile policy that covers up to $1 million. And the beautiful thing is, the carriers that we worked with, they did not require any medical underwriting for the child as long as the parents are insured to the tune of $1 million. So as parents, you could take out a term policy if you don't already have $1 million in life insurance, and that should be relatively cost effective. As long as you and your spouse or you and the other parent of that child are insured to the tune of $1 million, then the juvenile policy will be given to your child. So as an index universal life policy, the premiums tend to be quite affordable, but the strategy that we recommend if you're in a position to do so financially is to what's known as max fund it. So you want to fund it with as much as you can, even if the required minimum premium is in the hundreds of dollars. We want you to fund it to the maximum that you can. But these policies, because your child would be relatively young and healthy, are going to be relatively cheaper, or actually much cheaper than they would be for you. So that's the what, Big Al, right? The policy has a face value or a death benefit of $1 million, and you pay the premium, and as much premium as you're able to put in then allows you to begin to generate cash value that you can use for all kinds of expenses for your children. So Big Al has already mentioned this previously, but I think we should cover what you could actually spend the money that you would take out as a policy loan once you have enough cash value on. Do you want to cover that? Like what some of the...
Yeah. So, and I'm glad you brought up the cash value. That's what's making them
Yes.
these millionaires. And
Yes.
I wanted to make sure that we express they're not. We're talking about life insurance, but that I don't want you to think that your child isn't going to become a millionaire until you pass away. Then they get the $1 million policy, and now they're millionaires. We're not talking about that. We're talking about them being millionaires while they're still alive and while you're still alive, Lord's willing. And what was the thing that you just mentioned that you asked if I want to talk about?
Yeah, so then the cash value, and to Big Al's point, let's just make sure that we're very clear on the what. So the reason why this is called $1 million baby is because over the lifetime of your child, the policy's cash value will grow to $1 million or more. Right?
And they'll be able to access it.
Yes, because regardless of when you're starting, it will grow to that amount. Now, if you're starting with an infant, and depending on how much you're able to put in, it will definitely grow into $1 million faster. If you're starting with children who are like teenagers, like my kids, it will take a little bit longer, but over time, it will grow to $1 million. And what I was asking you, Big Al, because you've talked about this in the past, is once you have cash value in the policy and you take policy loans, what can you actually use that money for?
You can use it for almost anything at all. So here's the beautiful thing is that there are no restrictions on what you could use it on. And this is what's so much more beautiful about these types of policies or insurance rather than trying to do this through a qualified account like a retirement account or even some of your brokerage accounts. There are certain time frames and amounts and restrictions that you don't have to adhere to with an insurance policy. When you take out a loan or you have a line of credit or you have access to funds that are yours and yours alone, you can do whatever you want. You can buy a house and invest, or you can buy a boat, which is a big doodad, and blow your money. Now, this is why we talked about passing on the mindset as well, so that you don't blow your money, so that they don't blow their money, but they're investing it. But yeah, you can literally spend it on anything. And above all, do we have to pay taxes on it, man?
I'm so glad you brought that up, Big L, because folks, newsflash, as long as you're taking out a policy loan, which is considered debt, you don't have to pay any tax on it. And Big Al, one thing that you brought up, which we want to make sure people are clear on, your child is the insured. The beneficiary can be anyone, really, right? But because this is called $1 Million Baby, if you choose to, you can make the child a beneficiary. It might just be easier, though, to make yourself or the family trust the beneficiary, because you're going to be spending the money on behalf of the child. So if you choose, for example, we have a client that put their kids through private school and they spend $25K each year on each child. If each child had $1 Million Baby policy, you could borrow cash from that policy, from the policy's cash value through a loan, and you could pay for the school fees. Big Al, other things that people can pay on behalf of their children that you can think of?
Yeah, of course. Of course, they can use that to fund future investments where we're multiplying these millions. These are millions on millions on millions. So now if we use tax-free income, really it's not tax-free, because when you paid the policy, you're paying it on after-tax income. So don't get it twisted. By the way, I think one of my millionaire children about to walk in on us.
Let them walk in.
Yeah.
So, right on time.
So by the way, just to let you know, we also practice what we preach. Terrence has been so gracious to use his expertise to help us get policies on our children, and that's London, the youngest one. Baby, come on now. Go ahead, slip back out. I'm almost done, all right?
Hi, London. We should make her a Taylor Tax Show star. She should come and show her face.
Yeah, I just need to do her hair a little bit more first, but she's gorgeous anyway.
She's gorgeous.
So the thing is, it's like, imagine this, all right? You've already used after-tax dollars in order to pay the premiums, but it grows tax-free. You draw from it tax-free. If you're in as a loan, you use this tax-free growth in this account that we call an equity center to purchase more assets that build in value, which then create additional equity centers. And I'm telling you, we're not even talking about using insurance to make your children millionaires anymore. We're talking about using insurance to make your children decamillionaires and multimillionaires. And I don't know what the Greek word for 100 millionaires, but like 100 millionaires. So these are the types of things that we can spend the money on.
Thank you so much, Big Al. And folks, imagine also like your child is getting married and you want to make sure they have like a gorgeous wedding. That money can go towards that. Your child is taking a gap year and wants to travel and do some things. You could take the money out for that. Your child wants to buy their first home. I think Big Al may have already mentioned this. Like you could take the money out and put down payments. There's like no restriction on how you use those funds. And Big Al, I think we're at the end. So let's just tell folks that the most important thing in terms of when you do this is when you have understood the power of this and you're willing to put aside the funds to do so. Do it as soon as you get to that stage.
100%. One of the biggest aspects of this strategy, just to let you know, and I appreciate you mentioning and putting away the funds, is that you front load it or max fund the policy. Yes. That just means that you're going to do whatever you can to try to pay the entire life of the premium in the next 5 to 7 years or something of that nature. That way, with specifically an IUL policy, it provides the largest amount of your cash value to build and be invested so that it grows expeditiously. But
Yes. Think of it this way, folks. The more money you can put in, And the earlier you can put it in, the more time for that money to compound and grow and make your child a millionaire, a decamillionaire, centi-millionaire. Who knows?
That's it. That's it.
Maybe
Thank
even
you.
a billionaire, folks. Maybe even a billionaire. But folks, thank you so much for the time that you spent with us. We hope you got something out of this. If you want to check out any of the specifics around this, you could use the tailored insurance guide. You can find it on the OpenAI GPT store, right? Tailored insurance guide. So spelled Taylor, Taylord. If you want to get in touch with us, drop me a line at Terrence at taylortax.ai, TERRENCE at TAYLOREDTAX.ai, or Big Al at taylortax.ai, BIGAL at taylortax.ai. All right, folks. See you soon.
Cheers.